SPY is testing one of the most important levels on the chart near the equal highs around 749.50. And this next reaction could decide whether the market breaks toward 755 plus or finally pulls back after this massive rally. SPY is still structurally bullish overall, but price is no longer moving with the same effortless momentum we saw during the initial expansion off the April lows. Instead, price is now beginning to compress directly underneath resistance, which usually signals the market is entering a much more important reaction area.
The size of the candles, as we can see on this daily time frame, are definitely much smaller than we had during the expansion. Even after the recent expansion that we had from 731 to 749 didn't really have the same velocity and the same expansion range that the last few rallies provided ever since the April lows.
That's right. The biggest level I'm watching on any pullback from this zone resistance retest at 749.50 would be at 739.50 because that's the last defended higher low before this retest of equal highs. In other words, it's the short-term control zone buyers need to continue defending if they want momentum and structure to remain intact.
In my humble opinion, if we do reject 749.55 this time, very likely than not, the rejection is going to have more conviction to it, more aggressiveness towards 731.56. Keep in mind, the recent zone has been very tight in range when you compare it to the April lows of 629. We have ran from 629 to 749 in just 2 months. So far, price has been accepted from 731 to 749, and that is a very small range, as I mentioned, compared to the extensive move that we have had. This is why I think it's very crucial that bulls maintain the momentum, break 749.50 heading into Tuesday session with another hollow candle. If they close with a strong hollow candle, the chances that we see a continuation towards 755 is on the table. QQQ also inside of this range. We have been going from 696.51 support to 722.16. This can be another bull flag where the market will break 722.16 and continue higher for another leg, as we saw in the same measurement from the recent rally. So we have a rally and now we have a base, and we can get another potential rally if the Iran-US deal falls through, we finally get a resolution, and we get the Strait of Hormuz opening, ships passage. Things won't be uncertain anymore. This is what I'm looking at for QQQ. What are your thoughts, Ray?
On Friday's session, we pushed into fresh all-time highs, but buyers couldn't hold a breakout into close as sellers stepped in near the highs. After such a strong move higher over the past several weeks, that reaction matters because it shows momentum is no longer expanding as cleanly as before. So right now, the level that I'm watching here for QQQ is the mid-range of this zone, which is around 708 to 710 level. As long as QQQ continues holding above that zone, the broader trend still favors continuation higher.
Now that I look at it and I pay attention to the candles, the hollow candles, I think you're definitely right. Bulls are keeping it close to the 722 to trigger another potential squeeze operation. That can be very, very clearly seen when we look at the RSI hovering over 70% and trading at 71.36%. Now keep in mind, for those of you that are not aware of the RSI strategies, in an uptrending market, when price is above the 20 EMA line and consolidating with the RSI above 70%, this means that it's going to trigger what is known as a melt-up operation, and usually the melt-up operations trigger nonsensical expansion, and it'll be similar to what we saw recently above 635 breakout. We can see once we broke out from the RSI there, 635, it pushed us towards 664 really fast, and then it happened again. We consolidated, and once RSI got back above 70%, it triggered another melt-up operation from 651 all the way way to what we saw at 720. So now that we are back down and we have regained the RSI 70%, I definitely would be on the lookout for that potential expansion above 722.16 if the market ends up getting a resolution on the Iran-US war by the end of this week.
Definitely. Now, let's go over the sector rotations.
I'm looking at XLF, the financial sector. This particular sector is looking very, very strong in my humble opinion. The sector had been digesting for a while and awaiting the uncertainty with the new Fed chair appointment, Kevin Warsh. And now that we have the sworn-in new Fed chair, I think the market is ready here for another leg higher to advance towards 54 on XLF. Now, if we take a look at the weekly chart as well, we can see that bullish pennant, bull flaggish formation much better. We have a 3 green soldiers here, followed by solidified consolidation at the 20 EMA line. And finally, in the past week, we had a bullish engulfing, regaining the 20 EMA line and looking like this could be the start of the next expansion, sending us towards 53 to 54 area. If we translate that into the stock holdings within the financial sector, we're looking at JPM, V, MA, BAC, GS, MS, WFC, C, and all these really good names that we can look into for potential upside.
That's right, Body. My favorite pick would be WFC. Because after months of aggressive selling pressure from this 97 highs, it is finally reacting to a major weekly support zone. Price is currently testing a 3-year rising trend line while printing a bullish engulfing, which is a sign buyers are beginning to step in near support. The key level I'm watching is 76 to 77. As long as buyers continue defending that area, it has room for recovery towards 80 to 81 with potential continuation towards 88 and possibly all-time highs.
Great analysis on WFC. I agree with you. The setup looks really good. Bank of America is a stock that I'm watching. It has been digesting here for a long while and finally printing a bullish engulfing on the weekly time frame, regaining the 20 EMA line. And now with all this room, we can visit 57.31 and advance higher in the coming weeks and months. Now let's go over a few more. Here's JPM. JPM also printed a bullish engulfing on the weekly time frame, and when you consider the higher low structure here followed by the bullish engulfing, I think we should go with the trend, take advantage of the liquidity that is going to come in towards 316.
And as you can see on almost every one of these financial stocks, we are seeing a momentum yellow arrow indicator, which basically means that the bullish momentum is strengthening and buyers are still pushing price higher with force.
Great observation, Ray. We saw that happen in the last couple times right before the larger expansion. We can see it right here, and we can see it right here as well with the 20 EMA test followed by really nice expansion. Let's go over some of the stocks positioned really well to see nice upside. RGTI, this stock is getting, as we can see, massive bullish engulfing on the weekly time frame. We have really great volume, very similarly to what we saw last time before the large expansion, because the government invested $2 billion starting with IBM, all other quantum computing sectors. So we have IONQ as another potential momentum trade given this strong government backing inflow, and my main target for IONQ is around 82. So there's still plenty of upside with bulls stepping in, and the volume is definitely there, very, very strong. Keep an eye out on quantum computing going into the upcoming weeks. GILD, GILD Sciences, this stock went from 157 down to 124, 128, and consolidated there really well. Has this potential double bottoming formation right after the retest of the 200 simple moving average line, which is known to be a reset of the trend. And now bulls are stepping in again, very similarly to last time, holding above the 20 EMA line. It can trigger another start of a stronger uptrend. So if this is a stock that you are familiar with, this is a great time to get back in and potentially capture nice upside. You can have a hard stop around 128.17. As long as price doesn't get below there, you are looking at some really nice upside expansion direction from this 20 EMA breakout.
That looks like a really good setup body. And as you can see, they are breaking out off of that downtrend line on the daily chart as well. So great pick on this one.
And I have two more setups. HSY Hershey's. Hershey's stock has been under aggressive selling. And as we can see, we are right at this rising support trend line. We held really well after the May 4th retest. And ever since then, the bulls have been defending very strongly, coming in with strong momentum as we can see. And now here we are with a daily close above the 20 EMA line and its 200 simple moving average line. Every time Hershey's has come down to its 200 simple moving average line, it has held really well and seen nice expansion higher. So this is a setup that I am watching for Hershey's. I think it's really good. We can target around 209 before sellers really come in strongly. Now let's take a look at our last stock here, MGM. Really nice setup on MGM as well. This is one of my favorite stocks as an options trader. I usually buy call options 6 months out, just like Hershey's. I buy calls 6 months out. I make really nice profits when we do get those expensive moves higher. We have a breakout of this downtrend on the weekly chart, and we have been closing above it for about 8-9 weeks now. I think this is really good. We had a massive demand candle there with smart money defending that candle, and for months now, for over 3 months now, we have defended it really well, as we can see. And I think this upcoming week or next is going to be the time this particular stock is going to expand and try and break that resistance above 41.01. Once we break that resistance, we have a massive trend changing inverse head and shoulders anatomy that tells us the structure is changing. It's been digesting here at the 200 simple moving average line since last year, July. So I think this is very strong. Bulls are maintaining the hold really well, and eventually they're going to see an expansion higher above 41 to trigger another directional rally on the much larger time frames, such as the weekly and the monthly time frame. And that concludes our Sunday weekly watch list session. If you enjoyed this, please give it a thumbs up. Subscribe to our channel, leave a comment on what your thoughts are, what you think about the current market conditions. It has been absolutely historic, to say the least. Yeah, thank you so much for watching. We hope you have a great week ahead of you. Take care.